There's a story going around that Wall Street veteran Tom Lee single-handedly saved Ethereum. That through a masterstroke of financial engineering, he swooped in to rescue the world's second largest crypto from the brink of collapse. But
is this what really happened?
Because when you dig into the weeds, you find a story that's far more ambitious and potentially far more dangerous than a simple rescue mission. And this is the story of the single biggest institutional bet ever placed on Ethereum, a multi-billion-dollar gamble that could either cement crypto's future in global finance or introduce a level of systemic risk we've never seen before. So today, we're going to investigate the claims, uncover the real story behind Tom Lee's BitMine, and break down his audacious predictions for the future of crypto. My name is Nick, and this is a video you do not want to miss. First though, I am not a financial advisor, and nothing in this video should be considered financial or investment advice. This video is intended to inform you about one of the biggest institutional crypto plays of the year. And if you want more content like this, then fire up those like and subscribe buttons and decimate that notification bell so you don't miss our next video. Now let's start by addressing the central claim. Did Tom Lee save Ethereum? The short answer is no. Ethereum has always functioned as it intended, and unlike many other layer 1s, it's had no issue of downtime or technical gremlins. In fact, Tom Lee himself has noted that Ethereum has had zero downtime in its entire history. So where did the story come from? Because it seems to be a dramatic misinterpretation of what's actually happening. To understand the real story, you first need to understand who Tom Lee is. Lee is not some crypto-native degen. He's a seasoned Wall Street strategist with over 25 years of experience. He spent years as JP Morgan's chief equity strategist before co-founding his own research firm, Fundstrat Global Advisors, in 2014. What set him apart was that he was one of the first major Wall Street analysts to take Bitcoin seriously. Back in 2017, when Bitcoin was trading around $2,600, Lee published a framework for valuing it as a substitute for gold, predicting it would reach $20,000 by 2022. He was almost right, but not bullish enough, because Bitcoin crossed $55,000 in early 2021. And this brings us to 2025, and the real story behind the saving Ethereum myth. It's not a rescue, it's an acquisition. On June 30th, 2025, Tom Lee was appointed chairman of a little-known Bitcoin miner called BitMine Immersion Technologies. Immediately, the company pivoted. It announced a massive $250 million private placement, not to mine more Bitcoin, but to acquire ETH for its corporate treasury. And the list of backers was a who's who of venture capital and institutional finance. Founders Fund, Pantera, Kraken, Galaxy Digital, and even ARK's Cathie Wood all piled in. What followed was one of the most aggressive institutional buying sprees in crypto's history. In just a few weeks, BitMine amassed over $2 billion worth of ETH. By September, that number had ballooned to over 1.8 million ETH, worth a staggering $8.2 billion. And this made BitMine the largest corporate holder of Ethereum in the world and the second largest crypto treasury of any kind behind only Michael Saylor's strategy. BitMine was accumulating ETH at roughly 12 times the pace that Saylor had stacked Bitcoin in its early days. So not so much a rescue mission, more of a hostile takeover of the supply. And if you want to capitalize on the institutional trends that Tom Lee is leading, then be sure to check out the Coin Bureau deals page. That's where you'll find exclusive trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on the best crypto exchanges. All you need to do is hit the link in the description or scan this QR code. Once you've done that, you go to the Coin Bureau deals page and find a deal that works for you. Hit the sign up now button and take advantage of that deal ASAP, because these won't be around for long and they are only available to the Coin Bureau viewers. So hit that QR code. Now, back to the video. So this begs the ultimate question.
Why?
Why is a Wall Street veteran leading a multi-billion-dollar charge to accumulate as much ETH as possible? According to Lee, we're witnessing what he calls the Wall Street Convergence. He believes that the entire financial services industry is in the process of moving onto the blockchain. And the catalyst for this, he says, is stablecoins. He calls stablecoins the ChatGPT of crypto because of their viral adoption by consumers, businesses, and banks. And what is the backbone for over 60% of the stablecoin market? Ethereum. Lee argues that as Wall Street tokenizes trillions of dollars of assets in real-world assets, and as AI agents begin to create their own token economies, the majority of this activity will settle on Ethereum. He sees this as one of the biggest macro trades of the next 10 to 15 years. And this conviction is reflected in his audacious price predictions. For the end of 2025, Lee is targeting an ETH price of $10,000 to $16,000, and that's just the start. His long-term ultra-bullish target is over $60,000 per ETH. He gets to this number by assuming that Bitcoin reaches his target of $250,000 and that the ETH-BTC ratio returns to its previous highs, eventually reaching a ratio of 0.25. And if you think that sounds crazy, his long-term Bitcoin target is even bolder. $3 million per coin. Now, it's easy to dismiss these as just headline-grabbing numbers, but Lee has a track record of making bold contrarian calls that have paid off. He called the V-shaped market recovery in March 2020 and correctly predicted the S&P 500's rally in 2023 when most analysts were bearish. Of course, he's not always right. His call for Bitcoin to hit $25,000 in 2018 was famously early, but his directional accuracy on long-term trends has earned him a serious following on Wall Street. And now he's putting his money and billions of institutional dollars where his mouth is. However, this is where the story takes a darker turn, because a move this big doesn't come without major risks and controversy. The first and most obvious criticism is that there is a glaring conflict of interest. Just like Michael Saylor at Strategy, Tom Lee is the chairman of a company whose stock price is directly tied to the value of the asset he is relentlessly promoting in the media. Every time he goes on CNBC and predicts a new all-time high for Ethereum, he is directly benefiting his company's balance sheet and his own net worth. And this has led many to question the objectivity of his analysis. But the bigger concern is systemic risk, and industry veterans are sounding the alarm. And Nick Carter of Castle Island Ventures has warned that these publicly traded treasury vehicles are creating systemic risk for the entire industry. Even Ethereum's co-founder, Vitalik has issued a clear warning about the dangers of the excessive leverage in these treasury arrangements. He likened these strategies to an over-leveraged game, cautioning that forced liquidations during a market downturn could destabilize the entire crypto market. Analysts at Bernstein have echoed this, noting that over-leveraged firms could be forced to sell massive amounts of crypto into a falling market, which of course amplifies the crash. We saw a preview of this when BitMine announced a $1 billion stock buyback plan, which irked the community. Instead of continuing to stack ETH, the company was using capital to prop up its own stock price, raising questions about its long-term strategy. So in the end, the story of Tom Lee and Ethereum is not one of heroic rescue mission. It's the story of a Wall Street titan making the biggest institutional bet in Ethereum's history. He's not saving the network, he's trying to own a significant piece of it. His thesis is that Ethereum will become the base layer for a new tokenized financial system. If he's right, his investors will see astronomical returns, and Ethereum's place in the global economy will be solidified. But if the market turns, the sheer scale of BitMine's holdings could act as a financial time bomb, creating a cascade of liquidations that could drag the entire market down with it. This, my friends, isn't a story about saving crypto. It's a story about Wall Street arriving and bringing with it all of its ambition, capital, and risk. And we are all part of that experiment. Let's hope it goes to plan. Okay, if you want to see our breakdown of the other institutional players queuing up to IPO this cycle, then you can check out our video on that right over here. And if you're not subscribed to the channel yet, why? You can do that right over here. This is Nick signing off. Thank you guys very much for watching, and I'll see you in the next video.